Hello, I'm Manoush Zomorodi reporting for World Risk and Insurance News. Welcome to our first broadcast of 2012. 2011 is over, and for many, it was a year best forgotten. From the global financial crisis, concerns over sovereign debt, to record catastrophe losses, all put tremendous pressure on earnings in the insurance industry. And after such a volatile year in most stock markets, it's perhaps no surprise that the AM Best Global Insurance Index ended the year down 7.5%. 2011 also saw significant challenges due to new and pending legislation and regulation that will carry over into the new year, so the pressure to adapt will continue. In this edition of RIN TV, Nathan King reports from the NASDAQ market site in New York on where the stock markets around the world finished in 2011. We'll review international headlines making news in the industry with special reports on the property, casualty, and health insurance segments. We'll also take a look at efforts within the industry to resurrect loss control with a badge, which could have a positive impact on insurance rates related to crime. We'll cover these and other breaking stories as we make our way through 2012, bringing you the latest information and analysis affecting the global insurance industry. You're watching World Risk and Insurance News, the online video news network for the global risk and insurance community.
From our news bureaus around the globe, this is World Risk and Insurance News.
We begin with a look at how global stock markets closed out 2011. Here with a RIN TV financial report is Nathan King, who joins us from the NASDAQ market site in Times Square. So Nathan, are the New Year's revelers still milling about?
No, Manoush, the party is definitely over here in Times Square, but there remains a bit of a hangover from 2011, I'm afraid, here and in the markets around the world. Some analysts say that global stock markets lost some $6.3 trillion in value in 2011, thanks largely to the European debt crisis. Let's take a look, shall we? The Euro First 300 gauge of blue chip European companies, for instance, fell 11% in 2011. Germany's DAX 30 was off 14.7%, while France's CAC 40 dropped a whopping 17.5%. London's FTSE 100 stock index was down just 5.6% for the year, and Asia was hit particularly hard in 2011. Japan's Nikkei fell 17% for its lowest close since 1982 in the wake of the devastating tsunami which killed 20,000 people and caused severe damage to the country's energy sector. These catastrophes also disrupted manufacturing for some of the world's most vital component suppliers. Hong Kong's Hang Seng Index was also off 19.7% in 2011, and Singapore's Straits Times Index was down 17.5% for the year. China's Shanghai Composite Index was also off largely 22% in 2011 as tighter government curbs on lending and investment dampened the country's rapid economic growth. South Korea's KOMSI, which lost 11% of its value last year, and Australia's S&P ASX 200 ended the year down 14.5% for 2011. In the US, the S&P was basically flat year on year, while the NASDAQ fell just 1.8%. And in the lone bright spot, the Dow Jones Industrial Average actually did finish 2011 up 5.5%. In our next financial report, we'll look more closely at the insurance sector by segment and geography.
Thank you, Nathan. Now, let's span the globe for international headlines affecting the insurance industry. The Daily Telegraph in London reports that Neil Utley, chairman of Hastings Direct, will appear before the Lloyd's of London Disciplinary Board later this month to discuss Equity Red Star. The underwriter he once ran has been under investigation regarding concerns about unusually high bodily injury claims. Jardine Lloyd Thompson announced that its wholly owned subsidiary in Ireland had acquired FBD Insurance Brokers from FBD Holdings for an initial payment of €6.7 million. Tokio Marine announced plans to acquire Delphi Financial Group, the U.S.-based life, property, and casualty insurer, for $2.7 billion. In a statement, Tokio Marine said it's strengthening M&A activities in addition to organic growth for a balanced growth strategy. A recent study released by the Philippine Institute for Development Studies says that the government may have to increase premiums and amend the National Insurance Act to raise the 8.5 billion pesos, or $194 million US, needed to expand healthcare benefits to all Filipinos. And in the U.S., the Risk and Insurance Management Society announced Deborah Luthi as RIMS president for 2012. She is the enterprise risk manager for the San Francisco Public Utilities Commission. Congratulations Congratulations to Ms. Luthi. Now, let's turn to property and casualty. Record-breaking catastrophes in 2011 resulted in substantial price increases in hard-hit places like Japan, New Zealand, and Thailand. It caused many to believe a hard market was imminent. But in markets where catastrophes did not strike, rate increases have been more modest or non-existent. In fact, in a recent report, insurance broker Marsh said only half of its U.S. property clients saw increases in the last 6 months, and most of those increases were applied to programs with catastrophe exposure. And in an interview with Reuters, Integro's Nick Conca said that while insurers' aggregate results have certainly declined, it's still a profitable industry with an abundance of capacity and a good amount of competition for garden variety risks. And as many in the industry know, when insurers are profitable, they tend to be more flexible on price to retain business. Now, let's turn to healthcare. As part of the Patient Protection and Affordable Care Act, all individuals with health care insurance in the U.S. will be charged a new $1 fee as part of their premiums. The U.S. federal government will use the money collected to fund research regarding the effectiveness of prescription drugs, diagnostic testing, medical treatments, and procedures. Health insurance companies are responsible for collecting the medical research fee beginning in 2012. In 2013, the fee will increase to $2 a person and will be adjusted for inflation each year beginning in 2014. Now we turn our attention to crime or crime prevention and its impact on insurance rates. The National Insurance Crime Bureau, the National Sheriff's Association, and the CSAA Insurance Liaison Committee have joined forces to resurrect loss control with a badge. The feeling expressed in the new video campaign is, if there are fewer losses, insured should see lower premiums. Here are the highlights from their video message.
Resurrecting loss control with a badge and what that means to the insurers. Since 2008, stock market's gone south. We can't count on investment income. So insurers are back looking at making money the old-fashioned way, reducing claims, reducing losses. And we have technology in the industry that's really changed the way the game is played. Law enforcement are coming to our alarms again. They're making arrests, lots of them.
As law enforcement prioritizes their resources, property crime, as you might imagine, is not going to be at the top of the list. They have very significant crimes to deal with that relate to crimes against people, crimes against persons. Those types of crimes are going to get the public's attention much more frequently than crimes of property crimes.
Just to be clear, priority response is when our 911 dispatch center prioritizes video alarms to be dispatched by the deputies or responding officers. Video alarms are changing the game. I am aware of police departments that have arrest rates over 50% using video intrusion alarms and a priority response policy.
From our perspective, the more that can be done to prevent theft, prevent property crime, ultimately should result in the consumer, the commercial or the business seeing a reduction in their insurance rates, because ultimately it's about loss experience. And if there are fewer losses, the hope is that you would see a lower rate.
We have the tools now with insurers and law enforcement and the security industry to reconstruct and resurrect the insurance, alarm, law enforcement partnership that worked so well in the early 1900s. We together brought loss control with a badge to the policyholders, and that's what we're talking about now. We have the potential in terms of solutions and technology. We have the will on the part of the law enforcement, and we have the need on the part of the insurers to resurrect loss control with a badge.
As the new year gets underway, so does the industry event calendar. We leave you with a list of the major industry gatherings happening this month. For now, I'm Manoush Samarodi reporting from New York. Join us next time for more world risk and insurance news on RIN TV.